everyone, and welcome to Tuesday. And of course, what we do every Tuesday is take a look at the performance of the NZSX50 for the week. Just remember the normal housekeeping that this is for educational purposes only, certainly not intended for personal financial advice by any stretch. So if you're looking for personal financial advice, then you do need to go and talk to your own financial advisor. Let's have a look at the NZSX50. Right, we have got the New Zealand main board up here on the screen, being the top 50 companies, and you can see that that last week we've had a sell-off. Okay, hey, what's driving it? I don't know. I'm not the sort of investor or trader that looks into why markets are selling off. In fact, we've had 2 weeks in a row where the market has sold off. Like I just said, I'm not the sort of trader that is looking as to why. I'm just looking purely at what the charts are telling me. On a positive note, there is very little volume in these two sell-offs. Okay, just looking at the green and red bar chart underneath. So that can be a positive indicator. But let's look at the indicators. So like normal, I always put on the 30 exponential moving average, the 15. And like I've said before, there's nothing magic with these numbers. You've got to use what is comfortable with you. The only thing is keep it the same. So whatever 2 figures you're going to use, keep them the same. Okay, don't chop and change, because otherwise you're going to get varying results on that. So looking at the moving averages, and just last week you can see that the market closed below that 30-week moving average. So to me, that's just a sign that we just want to keep an eye on this and perhaps pause with any new purchases. We just want to see what's going to happen. The blue line being the 15-week moving average is starting to trend down. Now, whether this is just a little blip in the system or whether the market is going to continue to do something more sinister, I don't know. Okay, it's about waiting and watching and seeing what the markets are going to tell us. If I go over the 1 year chart, and we can see here, because it brings it up on a daily basis, you can see here that the 15 period, so 15-day moving average, has actually crossed through the 30-period moving average. So if you were looking at buying shares under my rules on a shorter time frame, now would definitely not be the time to be doing that. Okay, so that's something just to keep in mind. But if you look on a daily chart, which is what I've got up here at the moment, you can see that we have periods of runs, then we have periods of sell-offs. A period of run, period of sell-off, a smaller run, sell-off, smaller run, big sell-off. Okay, so that's what you've just got to keep in mind. For me, I'm sort of a medium-term trader, so that's why I look to see what the market is doing on a weekly basis and then just go and confirm that on a daily basis. So for me, for this week, there is certainly nothing that I am looking at investing in. I'm holding my existing positions, and I'm certainly making sure that I've got my stop losses in place. Definitely not looking at any new open positions. The volatility in the index, when I checked over the weekend, it was at about 1.9%. Again, not heaps of volatility, because if it was the moment we got to 5%, then definitely would not be entering into the market, because then it means to me that anything 5% or above, it's starting to get a little bit too much volatility, too much movement, and I don't want to risk it. But just having a look at the 2 indicators that I've got down here as well, the RSI, it's over a 10 period, and I have got this over a 5-year weekly basis. You can see that it's trending down. Okay, now when it gets to a 20 indicator level, it definitely means that it's oversold, but that doesn't necessarily mean a buy signal. It just, because markets can continue to be oversold or overbought for that matter for a long time before the markets will actually change direction. But this for me, because it's pointing down, is another red flag. And same if I look at the one underneath, the moving average convergence. Divergence, you can see here that the faster period moving average, has actually crossed through that faster one, and it's heading down. Okay, so again, another 2 red flags for me as to why I'm not looking at entering any new positions on the main board for the NZSX50. Just reiterate, definitely make sure that I'm holding any positions. I'm keeping my stop losses well and truly up to date, because that is what's going to protect protect me if something sinister does happen in the markets. And on that, I'll just stop sharing. On that, come back for Thursday because I'm actually going to show you Westpac shares. Now, Westpac was a share that I did hold, and during the week last week, I got stopped out at my stop loss. So I want to show you that and how that actually works and also protects your capital. So anyway, until Thursday, take care.